Well, everybody, welcome back to the Everything Real Estate Show. Today I have Erwin Szeto as my guest, and many of you might have heard his name before. He is the host of The Truth About Real Estate Investing for Canadians. He's a real estate agent in the GTHA area, so a lot of his business is Hamilton, Niagara region, and surrounding markets of the GTA. He's going to talk to us a little bit about fundamentals, what he's looking for when he personally is buying an investment property or what he advises his clients to look for in an investment property. He's also going to be talking about investing south of the border, so heading to the States and what fundamentals he's looking for in a location when he's identifying one down there, and what drove him to look down towards the States in the first place, whether it's population growth, affordability, the different ways to finance or manage a property. We're going to be talking a little bit about taxation and the differences between Canadian and American from that standpoint. And it's just a great conversation altogether. And we hope that you get lots of value from it.
My name is Cody Kraus, and on this show, I bring on guests to talk about everything real estate. Let's go.
Okay, everybody, welcome back to the Everything Real Estate Show. Today, I'm pretty excited to present to you Erwin Szeto. And for those of you that don't know Erwin runs the Truth About Real Estate Investing for Canadians podcast, which is the top 81 podcast business Apple podcast. Not even just Canada, I believe it's business podcast total for Apple Podcasts. Erwin, for anybody who doesn't know Erwin already, who is Erwin?
Just a regular guy who reads too much into the news and economics and understands where inflation comes from. So I just taken action on how to defend myself, my family, and our livelihood and our family's future. And just naturally, I always wanted to be rich in life. So that's how I kind of ended up in real estate. I'm a big believer in that the more value you create for other people, the more value is created for yourself. So I know in my experiences, if I have many successful clients, then I will be successful myself.
Love it. Cool. And what keeps you busy from day to day?
Oh, Jesus. My kids are young, 11 and 9, so they have me driving around all the time. And again, someone who spends a lot of time in their head in the future, always worrying about them.
Yep.
So there's that. I have a couple businesses. I have my local real estate portfolio. It used to be a lot bigger. Shed about 40% of it in the last 2 years. Just the way the market's gone. So today's, for example, is March 2025. So real estate's been pretty bad for a lot of us locals since about 2021, 2022. And then just digging into it and opportunities showing itself in the States made that change to the portfolio. So I have a portfolio. I have a realtor business. It used to be a lot bigger as we focused largely on helping investors buy west of GTA. And
Mostly
just
Hamilton.
Hamilton, Niagara region, have a lot in the Niagara region, Brantford, Kitchener-Waterloo, Cambridge. We used to do a lot of small single family when you could cash flow back in 2010 when you could cash flow in single family. Then we did small multis, then we did student rentals, then we did basement apartment conversions, and then we did garden suiting. So we've done it all.
No kidding.
Yeah, and so that kept me really busy. And, the team has shrunk down now that we don't focus much on acquisition, buying properties here, just because of the way the risks of the landlord tenant board doesn't justify the risks don't justify the returns, and a lot of my focus now is on things in the States. My partnership with a tech company called Share, a tech company that's in real estate. It's the easiest way to explain it, assuming the listener knows what a REIT is. Because thanks to technology and AI, we were able to bring what was only available to the ultra rich to the everyday investor. So the everyday investor can now receive the same services, the same passive operation ownership of U.S. properties. So they can be landlords without having to lift a finger, but they own the property. So that's what's really, really unique about this opportunity in the States that has me so excited.
Cool.
Yeah.
I'd love to dig into that a little bit more. I got a bit of a line of questioning here for you. So,
Sure.
how'd you get started in real estate sales, investing, all that kind of stuff? What was kind of the driving factor there?
Like many people, I was handed the book Rich Dad Poor Dad when I was 25 years old, and at the time, when I was 25 as well, like this was just off of I'm old enough. I graduated during 9/11,
Yeah.
so it was a very painful time for a fresh grad with lots of student debt. So even when I was 25, even though I was employed, I was still like it wasn't enough. Right, making money was not having a job was not enough after paying all the deductions from your paycheck and having a girlfriend and
Life
so
catches up with you. Yeah.
well, it's just life's expensive and then I read the book and like holy cow, why did they teach us this in business school? Why have a job and keep going up the corporate ladder and just pay a higher tax rate each time you make more money. And then all the benefits of being an entrepreneur and a real estate investor, like and the way, especially as a Canadian, we pay so much more tax than the Americans do. It makes even more sense for a Canadian to be a business owner or real estate investor. So it was just completely logical that I needed to go into something else. Real estate being very stable was very attractive to me because soon after we started becoming real estate investors, 2008 happened.
Yeah.
So the financial crisis, I thought I could pick stocks. I lost that portfolio just got destroyed. I had a stock go to zero. At the same time, this was a credit crisis. Our real estate portfolio was doing wonderful because this is a credit crisis. Our tenants didn't lose their jobs, but even if our tenants left, people couldn't get mortgages. So we had more tenants than ever to rent to. Our
Yeah.
rents actually went up during the financial crisis. So from that point, I poured in more effort. I joined the Real Estate Investment Network. Just it became an obsession of mine to be a highly optimized real estate investor. And then it got to the point where my friends saw what I was doing, and they asked me if I could help them. So I was actually going through for my real estate license just to trade for the family portfolio. And then friends knew that, and they said, "Can you help me do what I do?" And so I said, "Oh, that's easy. I know exactly what I would buy. I have everyone on the team already, so you can just jump into my ecosystem, and I'll only tell you what to buy something if I would buy it."
Yeah.
And then that started that business, and then I got really busy pretty quickly because that was during the real estate boom, and yeah, here we are.
I guess that leads right back to what you said. If you create value for others, it's going to come back to you. It sounds like that's
Yeah,
kind of how your real estate career started too.
yeah. I have about 4 dozen clients who've made a million or more in their in equity, at least from their investment portfolios.
Awesome.
Right? Yeah. And I have some clients who are financially free from the cash flow from their portfolios. Right. So yeah, I've done well, and my clients have done really well.
Love it. So 2008, property prices in my area, for context, Windsor, Essex area,
Yeah,
they
I
got
know.
kind of destroyed. So they didn't
Yeah.
go up. Well, you know what? They didn't go up the 20 years before that, but they also didn't go up for the next 5 years after that, basically.
Yeah. Yeah.
Um,
Yeah. I have
you're
friends in Windsor. I heard how bad it was.
Wasn't great, but you know what? That being said, created opportunity because you could buy homes like our average sale price in 2011, 2012 was something like 168, $172,000, right around there. So entry great, like the 1% rule was the thing in Windsor where you could, you know, get 1% of your value of the property per month in rent. Context wise, were property values going up still in the credit crisis in '08 in Hamilton, GTA?
They went down slightly, but even if anyone looks back at the Toronto Real Estate Board's numbers, I think we dipped maybe 2 months or 2 quarters,
Yeah.
and that was it. And it wasn't even much because yeah, because Canada was different. Like our banks were they had much better mortgages on their books, so our banking crisis wasn't nothing like the States.
Yeah.
But the other thing is, like, we should have all gone to the States and bought up everything. But sorry, but I had a friend who invested in Windsor, and he was telling me what was going on, like automotive jobs were being lost. all these landlords were pivoting to student rentals, and then student rental rents went like in half, right, overnight, and then
Yeah.
people wouldn't even show up, even at half the rental rate. People wouldn't even show up to showings, and so it's just a really good lesson in having to invest in areas with diversified, strong economies. And so, if you want to look for a diversified, strong economy, it's the writing's on the wall where to go.
Yeah, I was going to say, and so I guess that kind of leads me to my next question, which is you always talk about fundamentals
Mhm.
with whatever market you're looking at. And so one of the fundamentals would probably be diversified economy where we're not contingent on one industry doing well. Um, Another is LTB, so landlord tenant board. What are the landlord tenant scenarios like? So I guess I want to go back to 2008. So rents were going up at that time. What was
Mhm.
the landlord tenant board like at that time?
Before the anything over before the pandemic, you typically, my experience was we typically got a hearing 3 to 4 months. So tenant doesn't pay rent, we file an application, serve them in for file an application, 3 4 months, and also what's not talked about enough was before the pandemic, hearings were done in person,
Yeah.
and then I learned this the hard way, but so the best practice was to find the tenant, meet them in the hall, find a mediator, and then mediate for a conclusion.
Yeah.
Right? Figure out a payment plan. If the tenant didn't pay the payment plan, then you can file for eviction and things move really quickly from there. Right? And sorry, what was the question?
So the
Oh,
question was,
today
yeah,
versus today, on average, this I had Tony Erwin on my podcast just a few weeks ago, and he told me based on member survey, and so he's the head of Federation of Real Estate Professionals in Ontario, so the largest lobbying group in Ontario. So he has the most members and the most units, the largest membership of large real estate investors, including REITs. So he said from the member survey, from application to enforcement for non-payment of rent is 7 to 7.5 months, right? And
that's current
so
timeline.
that's a few weeks ago when that's just from member survey,
Yeah.
right? So that's probably pretty accurate from people who are on the ground.
Yeah.
And so then I posed the question to like the listener, in what business where you don't have to pay for 7 months and still entitled to receive services?
That and you don't even necessarily have to pay it back,
You don't have to
right?
pay it. Yeah.
Yeah. Yeah. And so at the time, '08, you said rents were climbing, prices were still pretty level.
Hmm.
An eviction might take 3 months for non-payment of rent at that time, two, three
Yeah.
months.
Yeah. Thankfully, we didn't have that issue. Yeah. Again, I was a decent student in school, so now I was an even better student of real estate, if I was being honest. So best practices were my flavor all the time.
So
So
tenant
we
screening.
all tenant screening. I do all the things that other landlords wouldn't do. I would, for example, I would call references, and then I'd also not. I'd be a little bit different as well. So I'd call a reference and I say, I'm interested in the unit for rent, and then they start pitching me the property, right? And I said, "Oh, thank you. I'm actually another landlord. I just need to make sure that you were a property manager, and the tenant didn't give me some false reference, his
You're just
buddy
the
or something."
friend from the dorm down the hallway.
Yeah,
Yeah.
yeah. And the funny thing was, I called one humongous one, and so I asked her, and she said, "Oh, that's really good. I'm going to borrow that myself." And I said, "Can I ask how often do people call you for reference checks?" She said, "Never."
That's
And
crazy.
this was the biggest property manager in the city.
Wow.
Right. And then another time it was funny because after after I came clean, he said, "Yeah, I was wondering how you knew about the place because we're kicking the tenant out because we're gonna move back into the place. It was an apartment over his butcher shop." Yes, but yeah, that's funny. But yeah, my point is that I've always gone above and beyond for best practices. When we do employment checks, I call the main number. I Google the business. I call that main number. I ask for HR, right? So again, I'm not going to go use whatever contact information they give me.
Get your
I'm
own.
using my own ways to verify that these things are accurate. Now today we have much better technical options like open door, front lobby, single key. All the owners are good friends of mine.
Yep.
Yeah.
How important are credit checks to you in the tenant verification process?
I think it's negligent if you don't do them.
Yeah.
So even before these companies existed, we still did Equifax, and most of the time we do the check ourselves.
Yeah.
Yeah, so we wouldn't accept an Equifax from a tenant. And
Just in
then
case.
even old school days, like when it was like the letter number codes, like the stuff that the mortgage people got, that's what I was getting. And then like having to ask my mortgage friend, how do I read this thing? And that force
Excuse me.
forward today, they're cheaper and more user friendly and more in depth.
Yeah.
Like Single Key does criminal checks now too. We never did that back in the day without calling a police friend.
Yeah. No, there's some great resources now available, that's for sure.
But I'll add
Um,
though, like, so I have lots of friends who are professional landlords, so they're all excellent screeners as well. The thing is, life happens, divorce happens, job loss happens, mental health breakdowns happen, health breakdowns, and usually from my community of really good investors, that's usually where the problem is when the tenant stops paying rent,
yeah.
right? No screening would have prevented that. No screening can tell me my tenant's going to get cancer 2 years later.
Or when a premier announces there's no new evictions,
Yeah, like no screening is going to prevent you, going to tell you when COVID happens.
for sure. So, like a big part of what you talk about on your show is market fundamentals, and I would imagine
Mhm.
that's a big part of what your clients come to you also for. So, do you mind like breaking down what are some of the absolute fundamentals that you would not stray from if you were looking at a property for yourself or recommending it to a client?
Right. So like the very basic thing is I look for population growth because think of real estate. So I always think of real estate as a business. So take a single family home as a rental property. It's a business. The more people interested in buying it or renting it from me, the more valuable it gets.
Yeah.
So how do I predict that values and rents will go up? By population growth of that area, as in people moving to the area. So I have more customers and also when their incomes go up. So I'm looking for two things. I'm looking for rising incomes and growing population. And typically, what drives those things are immigration, and often it's driven by new employment, right? So take like you're in Windsor, like
Yep.
take the new Chrysler plant. What do they call it now?
Stellantis. Yeah.
Stellantis. Take Stellantis for example. So Stellantis is going to hire thousands of people who make really good money, and that's naturally going to bring more people to the city and they make good money. So it's going to push prices up, and it's going to push rents up, right? So that often leads my investment decisions. Where can I find uh, where can I find massive amounts of job growth, income growth, but also at the same time looking for affordability, right? Where can my tenants afford to live? And these days as well, where is there more upside to the rent that they can afford, right? Versus like in Ontario, like most tenants can't afford a lot of this stuff. Like they can't afford today's market prices. It just takes, and even regular even people buying homes, like what's the average income to own a property in Ontario, right? If a
If you're
house is
buying at
600
today's
grand,
prices, it's crazy. Yeah.
right?
I mean, the only way people are buying 800, 900, 1.2, $1.5 million properties is really carrying equity forward from their last purchase or their last
Right.
sale, I guess. So population growth is a big one. And obviously, along with population growth, you want income growth in the area. But you mentioned diversity. So you don't want growth just because of one industry, for
Hmm.
example.
Hmm.
Affordability. So you're talking affordability on the purchase price of the house, but also affordability on the rent for the growing
Yeah.
population that would potentially
Yeah,
be the
and a
tenant.
basic affordability metric would be like income to price ratio. Well,
Yeah.
how much does the tenant do the people there make compared to the price of the homes, right?
Okay.
For just to again, I like to poke around. Like for example, like if you take a Torontonian, which I think all your listeners can agree is a higher income Canadian. If you took a Torontonian, I think they'd be if say Toronto was the 51st state. So again, I've taken a higher income Canadian and put them in the States, just hypothetically, right? They'd be the seventh poorest state, a
Is that
Torontonian of
is
the
that
51
converting
states.
CAD to USD or is that just
Yes,
dollar? Okay.
Yeah, we Torontonians make that little money compared in relative to other Americans, and then a Toronto house though would be about the third most expensive if it was a state in the
New
U.S.
York, LA, Toronto. Yeah.
Yeah, basically yes,
Okay.
right. We're in and around Washington, right? So you see the income to price disparity compared to the states, for as an example, or then we can take Vancouver as well. It'd just be just as bad.
Yep. Maybe worse.
Right.
Yeah.
Maybe worse. And Canada, for example, would be, I think, if Canada was the third 51st state, I think we'd be the third or fourth poorest state. And I think we'd be the seventh most expensive for real estate. So just that's a great, I think that's a really good comparison to show people how unaffordable it is to be Canadian.
Yeah. So that obviously shows why you're transitioning a lot of your portfolio to the States. How important is the mortgage and financing side of it? So when you're looking at market fundamentals, and if you were looking at any market in Canada, the financing strategy is the same. But once you start looking at another country, the financing strategy gets a little bit different also too, right? So when you're looking at
Yes.
your fundamentals of, I want to look at the population growth in a market, I want to look at the affordability of the homes there and the
Hmm.
rent. Then I got to look at the financing because typical
Hmm.
real estate investors aren't paying cash for every purchase. And if they are, they could scale a lot more arguably, but obviously there's safety in owning it cash and just having a consistent cash flow after that. So how does mortgaging the property and leveraging it play into that mix?
So what we're doing in the States is we're using debt service coverage ratio mortgages. So no different than you're doing for commercial here locally.
Yeah.
It's the property and its ability to generate rental income that qualifies the investor for the property. We do not need credit in the States to qualify. Obviously, having credit would improve our rates. We would get better interest rates.
Because you're getting commercial rates as opposed to residential that's
Correct.
guaranteed
Yeah.
by income. Okay.
Yeah, and that also like myself, most of my clients are novices into the States. Even our track history in Canada does not translate over down there to the lenders. But just to give an example, my mortgage guy in Windsor has 1,500 lenders, over 1,500 lenders ready to lend to non-residents of the United States,
That's
offering
crazy.
these debt service coverage ratio mortgages. And again, so remember, like I said, real estate's a business. Owning real estate is a business. Scalability is important to businesses, and with commercial style debt service coverage ratio mortgages, you can have as much as you want, as many as you want, as long as you have the capital to fund the renovations and the down payment.
Whereas if you're trying to expand in Ontario or
Ontario.
Alberta or anywhere in Canada, it's okay, great, Erwin. Yeah, you know what? You make good money. You can cover the property. We'll even use 50% of the rents or 80% of the rents towards the debt service coverage ratio. But the banks in Canada also have caps, right? Some banks are two or three properties. Some banks are five mortgages. We'll let
Hmm.
you keep going up to this, and we'll give you a portion of the rent towards the debt service coverage. But in the States, they're
Hmm.
basically just looking at the asset to cover the loan. And if the
Hmm.
asset doesn't cover the loan, maybe not a great thing to get into. And I would imagine one of your main fundamentals is cash flow, right? We're looking at the property, the income, the leverage that we're putting on top of it. Um, is the bank looking for positive cash flow in the States when they're looking at giving you these debt service coverage ratio loans?
So the lenders will go as low as 0.75 on the debt service coverage ratio.
Okay.
Obviously, you pay a higher rent and you're not going to cash flow, but like to each their own. I know someone who's close to me who's a doctor, makes doctor money, very secure, very little debt. Someone like that can handle some negative cash flow in their life,
Especially if
right?
it's going to be a vacation property too.
Yes.
Yeah.
Versus the everyday investor should always be focusing on positive cash flow, right? So a ratio of higher than one of the rental rent compared to the mortgage, taxes, insurance, condo fee,
Yeah.
right? The higher the better, because also higher means that you pay a lower rate as well. Up to yeah, I forget what the percentage is, but again, who doesn't want more cash flow in their life?
No, I think it's the best thing to look forward to. And you know what, on that note too, so you and your wife own a real estate tax advising firm. She's an
Hmm.
accountant, and
Hmm.
there's a lot of differences in the taxation between the US and Canada too. So for
Hmm.
example, if I make if I make $10,000 um, income in a rental property in Canada, that's taxed at 50%. It's taxed as passive income. But even though it's usually ghost income, because if I made $10,000, a lot of that was actually in principal that was paid back to the lender, right? How exactly does the taxation side of it work when you're going to buy in the States? Are you opening corporations? Are you owning it personally in another country? How does all that work?
So there's a lot there to unpack. So let's start off with there are a lot of similarities between how the Americans and CRA does taxes. So for example, if you're making $10,000, no different than we do here, we are able to use depreciation as a paper expense against our income,
Yeah.
and the same with the states. So and also the reality is most investors are looking to scale. So if they do have any sort of significant cash flow, they're typically re-leveraging to buy more property
Yeah.
and and generally investors are looking to keep their income tax as minimal as possible and to scale, right? But for those who do want to just collect cash flow, like I have lots of friends who just collect cash flow as well, then the tax rules are no different really than here than there in terms of how you report income. Because CRA still wants their pound of flesh,
Yep.
which is pretty much always more than what the Americans charge. Because for a lot of places that we invest, there is no state tax, right?
Interesting.
Versus we have provincial tax in Canada.
Yeah.
Well, except for our Albertan friends, they have less.
Now, what about the taxation on passive versus active income?
Same. So the what I'm sharing is 99% of our clients are passive investors.
Okay.
They're the definitions are different. They're active investors in that they own the property, but they're passive is that in that they're not on site, hanging doors, hanging drywall, changing light bulbs, and renovating.
Yeah.
Right. So they're passive in that they're not doing anything. They're active in that they do own the property directly.
Or indirectly through a corp that they control.
That's yeah, but that's still your that's still technical. That's to me that's still direct ownership,
Yep,
right?
for sure.
Right. Now we talked about ownership as well. So again, most of our clients are passive. 99% of our clients are passive. So they're doing general partner, limited partner structures. And so the general partner is typically a limited liability corporation and a limited partnership in whichever state where the property is located.
Okay.
So, for example, ours is located in Texas, and for the near future, we'll only own property in Texas because for every limited partnership, every state that you own properties, you have to do a tax filing for. And for each tax filing, that's then you have accounting fees for that,
Yep.
right? So
Now,
it's smart to keep things into one state for the first couple properties.
definitely. And I want to bring up one thing, but I'll just on that note really quickly first too. Like I'm trying to think of how to phrase this. So passive income in Canada, we're taxed at 50%. Typically, from what I've read, like with Rich Dad, Poor Dad, things like that, they actually tax the passive income at a lower rate in the States. They want people to have dividend income. They want people to have passive income, where your
Mhm.
active income is relative to the amount that you're earning. I don't know
Mhm.
if that's what you're finding or not. But
The
that,
thing is, like, again, so because the Americans have no state tax, the places we're investing typically have low to no state tax.
yeah,
But the way if you're a Canadian resident paying tax in Canada, the CRA will credit you what you've paid to the Americans, but they want the balance. So
okay,
there is no tax saving overall. You're not paying less taxes by being an American investor if you are a Canadian resident, but you're not paying double tax like that concern that mistake that some people do when they don't have the right accountant.
okay. Now, setting up a LLC in a different state, figuring out the
Hmm.
accounting practices, all that kind of stuff. I buy a
Hmm.
property, I have direct ownership. How is that passive when I have to figure out the tax law in Texas when I'm still trying to figure out how to file taxes as a Canadian in Ontario or BC or like, and I guess this is my segue to, do you want to tell us all about share?
Well, sorry, on the accounting side, like I hired as soon as I owned a property, I hired an accountant. Right. back when I was like 26 years old or something like that, when we bought our first property. I forget when that was, but like, and before again, so I went to business school, so I felt comfortable doing QuickBooks on myself. When I was a T4 employee, I would do my own tax filing. But as soon as I had a rental property, and like this is above my pay grade, hire an accountant.
Yep.
I don't see why that'd be any different today for anyone who's going to be being an international investor.
Yep.
Hire an accountant. So my preference is I use real estate tax tips. Obviously, I'm biased because that's my wife's company, but they do taxes both in Canada and the U.S. And for my clients, they set up their U.S. entities as well.
Okay.
So it's incredible to have that benefit to have your accountant advise you to how to own your U.S. properties.
So there are actually Ontario or Canadian, I guess accountants, tax agencies, whatever. They'll actually help you with the filing of the new corp in whatever state you're looking to acquire property in.
Yes.
Okay.
In
So
my
that
experience, though,
covers
they're very, very rare to find.
so that covers part of it, which is how exactly do we figure out how to do all that? And your answer is you don't have to find a Canadian company that's experienced in doing that, and they'll
Yes.
handle it
Who,
for
not
you.
how.
Okay.
Right?
Makes
Find
sense.
who to do it. You don't necessarily have to know how to do it yourself.
Okay. So that takes care of the setting it up here. That doesn't take care of we have the property now, or we want to start identifying the property.
Hmm.
How do we buy a property in Houston or Austin after we've
Hmm.
identified the market that we want to be in? Let's say
Hmm.
it needs repairs. It's vacant and we need to tenant the property. How does
Hmm.
all that work as a Canadian that's not active in the everyday?
So I'll just touch on what active means. First of all, like typically how most would be, they would find referrals for realtors. They'd call and interview 5 or 10 realtors. Sophisticated investors would be calling, interviewing 5 to 10 wholesalers as well.
Yeah.
Then you gotta go find a property manager, you gotta find a contractor. I was just having coffee with a friend of mine who got ripped off for 30 grand from his contractor in Cleveland, Ohio, right? That's why there's a lot of upfront work to do if you want to be an active investor. Like active when I mean like you're gonna go there, right? So I've been lucky. I got introduced to Andrew Kim, who's the CEO of this company called Share. And when he showed me what they're capable of doing, I said, "This is better than anything we can do in Canada." So Share, what they do is they're one-stop shop. They help clients set up U.S. entities. The CFO is an accountant in both Canada and U.S. as well, so they're already well versed into what a Canadian how they should structure. They find my clients their properties. I think I only have one client who bought a property on market, which is why I say like people should be looking off market for property because that's typically where the better deals are. The challenge with that though is that it requires double the due diligence. As a
Yeah.
rule of thumb, off market wholesaler deals like those deals are not regulated at all. At least a realtor has some regulation. So double the due diligence. There's a reason why the property is not being sold on market. And then from there, you need third party home inspection. You need a property manager. You need someone to renovate it. Share brings that all together for me, right? They already have relationships with wholesalers, also property managers. Property managers are a very common source for deals off market.
Just
Here,
because they would
here,
know when a
yeah,
when a landlord wants to get out of a property.
yeah, yeah. And
Yeah.
it's just natural when you're trying to sell. You should network and see if you can sell a property without a realtor. Talk to your property manager. Know anyone buying? I'm looking to sell this.
Yeah.
And then the funny thing about the States as well is that a tenanted property is a good thing because there's no rent control. The rent's probably pretty good. Someone can just walk into it and have a turnkey property,
Yeah.
making cash flow day one,
And
right?
then
And
landlord
so,
tenant issues are state to state. There's obviously probably states that are more in favor of the tenant. You guys look to landlord friendly states
yeah,
where,
it's actually funny in my early diligence. Like for example, when I was like for example, Detroit is getting a ton of investment from the big three auto manufacturers. So I asked ChatGPT, "Is Detroit, Michigan tenant friendly?" It said yes, because it can take up to 6 weeks to get a hearing for non-payment of rent.
you're like versus
That's
our seven
considered tenant
months.
friendly,
Yeah.
right? So the standards are the goalposts are different in the states, completely different versus the areas that we invest. Non-payment of rent. probably 3-4 weeks
Okay.
for enforcement, right?
For enforcement, not even for a hearing. Okay.
Yeah, no, like I'm talking after hearing
Okay.
enforcement. There is no division of government designed to protect the tenant, right? You're going to court, and it is the local law enforcement who is evicting the tenant.
Interesting. Whereas we have a representative of the province over here,
Yes,
right?
where
We're
you have to
waiting
pay
on the
hundreds of dollars
sheriff.
for.
Yeah.
Because I hear people are paying up to $400 for a sheriff here. Like the police fee is way less,
Yeah.
and again, it's the local law enforcement who removes the tenant.
It's a big
Just
difference.
big
Yeah.
difference. But so again, but and again, so the benefit to my clients is we're getting end-to-end service. You Warren Buffett back in 2012 said, "I would own thousands of single-family homes if I could, if there was a reasonable way to do so." And Wall Street at the same time was trying to figure it out, and they did. And
Yeah.
now it's a $4.3 trillion industry,
Yeah.
just owning single-family homes in the States.
Oh, there's a good question.
Yeah,
Why single family and not multifamily? Why not commercial? Why not apartment buildings? Why the focus on single family?
it's just where we can find partnerships and where can we source deals easily.
So,
That's where we're starting with share right now.
as a realtor, I often recommended to my clientele if they were looking for an investment property, I always said if we can get a single family that's cash flow positive, I
Hmm.
like that best. And my reasoning was, and I would imagine you're on a similar vein, is liquidity. So real estate is a great asset class. I love owning it. However, it's highly illiquid. In other words,
Hmm.
like you got to find a buyer, they got to be able to purchase it. If we have a tenant, that could be another issue in Ontario, whereas it sounds like it could be a positive in other parts of the world. Um, but if I'm buying a duplex or a triplex or a 12 unit or a 20 unit, every unit I add to that, there's actually less purchasers for it. And the other
Hmm.
thing I would say too is that when you're selling a single family home, don't quote me on this, but I could see up to 5% of the price that it ends up going for, up or down, could be attributed to emotion. Whereas investors don't attribute any value to the property in emotion. It's just numbers. Does it make sense? Is
Hmm.
it cash flow positive? What's the NOI? What are our actual cap rates? With single family, if another COVID happens, people just want a little house with a yard, they'll pay 5% extra more for it. If it's a scarcity thing and they're just tired of living in their apartment, you
Hmm.
don't typically see that a whole lot with fourplexes. It's just numbers. How much does that play into it?
All of it. Uh, so, for example, and it's been a bad market for like the last 3 years or now for investors selling. I was able to sell my properties on an average of 20, I think 22 days. On average, I was days on market for my 4 investment properties.
Okay.
I forget where I was going with that. And so, yeah, my point is liquidity, like you said. I want my money. I want my money. I'm technically I'm borderline millennial, so I like things quick. I want my money. I
Yeah.
want my money. Again, I was able to exit within just over 3 weeks on average. My investment properties and apartment buildings are incredibly liquid right now. Like CMHC is like dragging their heels on refinancing a lot of my friends on their multifamilies.
Well, even a commercial appraisal could take 3 months, 2 months, right? And that's just the appraisal.
Right,
That's not actually the
right,
funding of the deal. Yeah.
right. Versus I'll already have my money back.
Yeah.
I've already exited my property.
Yeah.
And there's many reasons. A very simple reason was, and again, I do a lot of due diligence. I was reading the transcript from an earnings report of, I think it was America Homes for Rent, which is one of the three biggest REITs in the States.
Yeah.
And someone asked the same thing on the analyst call. Why don't you do, because the REITs in the States, they have so much money, they're building houses, right? Like 70 to 300 houses a year they're building and then renting them out, right? They're doing subdivisions. The point is that so they're building so they can build whatever they want. So the question was, why don't you build multifamily? And they said, we're building what's in the lowest supply and highest demand, and that's single family home. Because
There's a
again, these
lot.
are capitalists. These people, these businesses exist to make optimum money, right? And their business decision is to build single family because
Yeah.
they're saying anything with more density, like a townhouse or a semi, the rents are lower, the vacancy is higher, and the rental concessions are higher, which is something we don't really talk about much in Ontario. Maybe
And the
in
reason
commercial you would.
And the
right?
resale market is a smaller group of people. So why don't you?
Well,
Yeah.
because the numbers aren't as good,
Yeah.
right?
Yeah.
And then
So,
I literally looked at my numbers. So my house is in San Antonio. I actually found side by side semis that were actually duplexes just around the corner from my rental property in San Antonio.
yeah.
And like, I love the American tools because there's much more data available to you. I was on Zillow. It took 18 months for that house to sell
That's crazy.
for a purpose built, maybe 20-year-old side by side duplex. And there's a row of them, right? There's a
Yeah.
street of them. So then I can see what their asking rents were for a lease, and they were worse than mine for a single family home. So to
Wow.
your point, the numbers don't make sense. That's why they sell for less. They take longer to sell. The rents don't make sense. So
Well,
again,
and
this is a business decision.
if BlackRock thinks it makes sense to go out and build and manage single family homes, why would we build a fourplex, I guess? Right. And so for anybody who's not familiar with what a REIT is, it's essentially Wall Street's way or Bay Street's way of letting you buy real estate on the stock market or indirect ownership, right?
Yeah.
It's a pooled
Or private
resources.
equity. Yeah. Yeah.
Yep, exactly. And so before our call, you kind of mentioned that you look at share as kind of the tools that were typically only available to REITs or other large scale investors, but they make available a lot of the things that a small company or a family investor would look for, but was typically unattainable. Do you want to maybe cover what types of tools those are and what makes that so attractive now? It's, I guess, giving us the toolbox of a Wall Street investor as a mom and pop shop.
I don't even know where to start because we're just so tech. The share as a company is just so tech enabled.
Okay,
We haven't covered
well,
property management, for example,
yeah.
because like I mentioned, real estate to me is a business, and scalability is a challenge opportunity for every business. I mentioned earlier, single family homes is a $4.3 trillion business industry in the States. To give context, that's more than double the size of the Canadian economy. As such, there's massive property managers in the States, right? And I think every investor knows that there's a level of risk with property managers. Like, for example, I've personally fired 6 property managers for my own portfolio and for my clients as well, right?
And the systems that the property managers have when you're dealing with a small company versus a massive company. Like a friend of mine bought a place in Florida and he's like, the tools that these guys have, the reporting software,
Yeah, yeah,
unbelievable. And they're
yeah,
managing thousands of units compared
yeah.
to, calling Joe down the street who manages 10 units and he's going to fix the sink himself, but he can't produce rental receipts for the tenants.
Exactly that. There's large scale, large automation. The smallest property manager we use has 3,000 houses under management in the city.
How many
Share has a requirement on how many full-time employees they have.
how many property managers in Canada would manage 3,000? How many would meet that requirement?
I think zero. Well, first of all, the largest REIT owner in Canada, single family homes, I think is the portfolio is 550 houses
Uh,
versus Tricon, which was just bought by Blackstone. The Tricon is a Toronto company,
yeah,
and it was listed on the TSX. They had a 36,000 house portfolio in the States,
unbelievable. Yeah.
right? And they were not by nowhere close to being the biggest REIT in the States, a holder of single family homes. Forget. Oh, sorry. And but back to your question on where are these property managers in the States? They're nowhere. If they exist, they're only for apartment buildings and in-house. Right.
Yeah,
So
so it would
Effort
be
Trust might be
self-managed. Yeah.
they only manage for the company. Like Effort Trust probably somewhere around that. Their property management company will do that, but they don't take outside clients for property management.
Yeah, they're not going to take Irwin's 4 student house portfolio in Hamilton.
No.
Yeah.
No. And again, but the property managers we're using in the States for my clients, they won't talk to me either. Right? They
Okay.
want to be a client of Share.
Oh,
Share is the
interesting.
institutional investor.
Okay.
The analogy I like to give is like, Cody, you shop at Costco,
Yeah.
right? If you have a problem with the Kirkland product, do you call Kirkland or you call Costco? You bring it
Yeah.
back to Costco, you go to Kirkland's head office, right? So same idea. Like I get to benefit from the buying power of Share, and they're my contact. Like, and then now Kirkland doesn't have to talk to the end consumer,
So
right? They only talk to Costco.
it's almost like a buyer's group for a lumber store. They can't compete with how much Rona or Home Depot buys, so I buy into a buyer's group where a
Hmm.
network of much smaller lumber stores can
Yeah.
benefit of the large scale purchasing. Okay.
Yes. And now in turn, my clients can save on insurance. They save on repairs and maintenance, leasing fees, property management fees, right? Because they're part of this buyers group, investors group, right? While they directly own the property.
Yeah.
It's their property. There's no shares. It's just direct ownership.
Now, we talked about, you spoke about maintenance there. So one thing probably to bring up is HOAs. So how
Hmm.
much maintenance would you depend on your management company for versus would you just prefer to look in, I guess, neighborhoods or subdivisions or developments where there is an HOA, or how would an HOA or even a condominium fit into what you're looking for in the States? Because you can still have single family condominium or single family in
Hmm.
an HOA, right?
Yeah, I think my HOA fee is like $9 a month.
Okay. So they're
I
not
think I
taking
only
care of your
depend on them for maybe
grass.
some grass cutting.
Okay.
Probably not even my lawn. Most of our clients, I don't think any of them have a condo, an HOA fee over $300. So we're not a year. So we're not depending on the HOA at all.
Okay. Or you're not looking at heavily HOA managed neighborhoods for your portfolio because there absolutely are neighborhoods with really high HOAs, but they take care
Yeah.
of everything, right?
We're in the starter home category. So we're not looking at premium property. We're looking for, again, for real estate to be liquid, it has to be
Yeah.
affordable,
Yeah. We're not
right?
looking at a gated community backing up to a
Yeah.
golf course.
Nor are we looking at new construction condos
Yeah.
because people fail to remember a new construction condo, I don't care what city it is in Canada, that's meant for the higher end
Yeah.
because only the higher end can afford those rents. Like we're looking for middle class, lower middle class people that can afford our properties, where the
Yeah.
majority of people are.
So I guess on that vein, talking about liquidity, I guess supply, all that kind of stuff too. I was talking with some friends of mine the other day about a 1031 exchange.
Hmm.
And I think that's part of our housing issue in Canada is that we don't have a tax code that encourages investors to roll their portfolio over. So if I
Hmm.
owned, two starter condos or two single family small homes, there's not an incentive from a tax code standpoint for me to flip those and buy a bigger and better property. Whereas in the States, they actually encourage the opposite, where they go, you know what? Erwin, if you have three starter homes and you're willing to roll that over into a 12 unit, we'd love to see you sell those three single family homes. It will actually delay your capital gains on those as long as you're taking all that money and putting it into the next product, right? So if you're buying a 5 unit or a 12 unit, you can
Hmm.
delay those, I guess, capital gains by rolling it over
Hmm.
in a 1031. I
Hmm.
don't know, like you're just starting your search in Canada right now, but how much did the 1031, I guess, play into? Excuse me, I got a cold. How much did that play into your decision into investing into the States?
Well, let me just add on to the 1031 exchange. Like you have
Sure.
kids, right, Cody?
Four. Yeah.
Four. So this is unfortunate. You and your wife can only pass on $19 million of assets, each of you, to your kids
In the States. Okay.
in the states without triggering triggering capital gains tax upon your death. Right?
Only 19
There's
million. Okay.
only 19 million for each you and your
Oh,
wife.
for
That's all you're
okay.
allowed to pass on tax free to your four kids.
No, that's too
So
bad.
maximum, they're only getting 10 grand of that real estate portfolio. So really unfortunate for them that they can't protect more of their intergenerational wealth. It's something we should all cry over. I, I forget what my point was. I think my point is 1031 exchange people I'll talk about all the time. Uh, the Americans are so much more on board with intergenerational wealth than we as Canadians are because again, like you said, you sell, you trigger tax capital gains here in Canada, and then when you die, again, you trigger capital gains, right?
Yeah, sorry, I was just plugging my computer in there. But yeah, it's a crazy difference. And so I think like headline wise, people would be like, "Oh, we're gonna reduce taxes on the super wealthy by letting them dodge capital gains." But it doesn't get fully explained to the point where actually it's a positive for lower income and middle class because it's going to
Hmm.
introduce more properties that are in that
Hmm.
affordability standpoint. So in the
Hmm.
States, they probably don't even have to build as much compared to us because there's more turnover of those entry level assets, right?
Hmm. Hmm. And then people have to, again, the poor people need to understand, like, you will get out of your family line will get out of poverty faster with these tools
And stay out. Yeah.
and stay out. And I think we can all agree building supply is for the betterment of mankind.
As long as the
It improves
population is growing.
affordability.
Yeah, that's for sure. Well, even if the
Even if
population's
population
not
isn't
growing,
growing,
it's
real
still going
estate
to
gets
bring the value
cheaper. Like,
down.
how does that
Yeah.
not benefit society?
Yeah. You're
Right?
right.
I believe every city planner wants that. They would love real estate prices to go down,
Yeah.
right?
Well, they'd be out
Because
of a
you're
job
servicing your
sooner,
people.
but yeah. No, that
I know,
makes a
for the
ton of
greater good.
sense. It,
But CRA does not there is no such deferment of capital gains in Canada, such as a 1031 exchange. So CRA does not recognize the deferment,
yeah.
right? And that's how double taxation happens when people don't, because CRA will expect that tax to be paid, right?
Okay. I think I have one more question for you. And so
Yeah,
obviously
shoot.
you advise a lot of investors, you talk to a lot of investors on your channel. Um, you're obviously seeing everything that makes sense for you to be investing your money in the States.
Hmm.
There's still people investing money in real estate in Canada and still
Oh
doing
yeah.
well. They've just had
Hmm.
to change tactics. Do you want to maybe speak to some of the opportunities that you still see in Canada for real estate investors?
What I see is if people want to be in residential, rent to own and student rental done properly can still be very profitable.
Yeah,
I have no personal experience with it, but I do know people who are doing well in industrial, right? Just that like where I live, industrial is extremely expensive,
yeah.
so you have to be quite a bit further out in order to find industrial land and real estate that makes sense.
So you're looking to
But you know,
secondary and
I'm
tertiary markets.
yes, like a Sarnia or a Thunder Bay. Again, I don't have any personal experience for it, but on paper to me it makes sense based on the internal rate of return, cap rates, those things. On paper it makes a lot of sense. But for the everyday investor who doesn't want to be spending more than 15 hours a week on these sorts of things, I don't see a greater opportunity than what shares offering.
Yeah.
That
Okay.
fair?
Yeah, no, that makes a lot of sense. Thank you for your time. I don't want to take up too much more of your day, but I'm sure that the listeners to this podcast will appreciate it. So thank you so much for coming on, and I guess enjoy the rest of your day and enjoy your weekend.
Thanks, Cody. Thanks for having me on.
Yeah, no problem.
Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.